Good morning everybody and welcome to Morning Markets. Today I want to discuss the US inflation numbers that came out yesterday. See the very much awaited numbers that came through. So if we look at the numbers first, so the Federal Reserve's preferred measure of inflation is called personal consumption expenditure. And if we look over the month, the figures came in at 0.6%. And that compares to 0.5% for last month. But really it's the yearly figures that everyone's interested in. And that figure came in at 6.4%. Now you're probably thinking, well, I'm just giving you numbers here, but how can we put that into context? So that is the largest increase in inflation since 1982. Now let's take a step back here and just think about, well, actually, why is inflation so high? Well, we sort of know the answer to this. You've got higher petrol prices, got higher energy prices. Obviously today is the day where the energy cap is removed, Bleak Friday, as a lot of different news services are calling it. And what you're seeing as well is supply constraints. So if any of you tried to buy a new car recently, electronic goods, you can see that they're more expensive because there's not enough supply of those semiconductors. But that's the background. Let's try and concentrate on what governments and central banks are actually doing about this. So firstly, what are central banks doing? And if we look at the US here, but actually all central banks in developed markets are doing this, they're raising interest rates. But actually, this is normal. It's abnormal to have interest rates so low when actually the economy is growing and the economy is growing strongly overall. So why are they raising interest rates? You raise interest rates as a way to stifle demand overall. So obviously prices go up and lead to inflation. That could be on the supply side because supply is very tight, which it is right now. Or it could be that there's actually very strong demand, which again, there is right now because we're coming out of COVID. And what raising interest rates does is it deals with that demand side overall. But what else happened yesterday, which was quite interesting around the overall inflation outlook? And that is that Joe Biden yesterday, so he's the president of the United States, came out and said that he was going to release further oil supply from the US oil supplies overall. Now, what does that mean? It means that it's going to push down on the oil price and it's going to help reduce that inflation level overall. But really, let's just take all of that as one thing and let's just try and come back to what's our view, what's our conclusion here? Our conclusion is that inflation is high. We know that. We can see that throughout the world. You can see that in the numbers. You can read that on any different news service that you look at. But what do we see moving forward? Well, what we see as an investment team is inflation will stay higher as we move through this year. It will potentially move higher from where we are. But actually, as we come to the back end of the year, you'll start to see inflation come down to a more manageable level overall. That's everything from me. Before I go, what I want to do is plug something, which is an investment management podcast, which is going to be next week. So please tune into that. And most importantly, enjoy your weekend. Thank you.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.